Hello dear students, welcome to Devika's Commerce and Management Academy, Cost Accounting. We are talking about cost accounting, introduction part I gave you, and also what is cost sheet, how to prepare cost sheet, this we have seen the pro forma. Now today we will work out one problem. Total related to the cost sheet, we will do three problems, three different problems. Pro forma remember, but different types I will teach you. If you are perfect in that, you can work out any kind of problems, more or less adjustments you will find, but basically I will give you good idea about what is cost sheet. So you know that in the previous class I taught you what is cost sheet, the pro forma. Let me give you a recap of the pro forma. Remember that direct material, direct wages, these two are important. Direct material, direct wages, together we will get prime cost. What is prime cost? Prime cost means nothing but direct material and direct wages, together it is prime cost. Once if we get the prime cost, then add factory overheads. Factory overheads means you know that related to the factory any kind of expenses we have learned already in final accounts. So those expenses we are adding. If we add, you will be getting works cost. Works cost or factory cost, anything you can say. Once if you get works cost or factory cost, then we have to add office overheads. Factory overheads are over. Next, office overheads. If we add office overheads, we will be getting cost of production. Cost of production. Once if you get cost of production, if you find any kind of closing stock, cost of production, if you find any closing stock, that you have to deduct it. If you deduct, you will get cost of production of goods sold. This is cost of production. And after deducting closing stock, cost of production of goods sold. Cost of production of goods sold, okay. And from that, selling and distribution expenses we have to deduct. Selling and distribution related to the marketing. Selling and distribution expenses if you deduct, you will be getting cost of sales. Cost of sales you are going to get, okay. And sometimes they will give you sales value. If they give you sales value, you will write sales like this. Sales value. Cost of sales is this much. Sales means sold at this rate. The difference is the profit. So you will be writing profit here. How do you got the profit? That's the difference between the cost of sales and sales. Are you getting it? Cost of sales. Exact cost is how much and at what rate you have sold. The difference itself is the profit. So this is the general pro forma. Remember this, all the problems you are going to work out same thing. So you will find it a problem on the desktop. See the problem. First let me read this problem, then after that we can work out. The problem is here, the following data relate to manufacture of standard product during the month of March 1999. Raw material consumed, direct wages. These two are main. Raw material consumed, direct wages, these two are given. If we add these two, you will be getting prime cost, okay. Then after that, machine hours worked, machine hour rate. Machine hour worked, machine hour rate, this is related to the factory expenses. So factory expenses are given. How do you get this value? Machine hours worked, 8000 hours worked, per hour rate is 4000, 8000 into 4, it comes to machine hour cost. So that is nothing but factory cost only. Once if you get factory cost, then you will be getting this works cost. Now after that it is given office overhead, means office overhead, that is given 10% of work cost, okay. And selling overheads are given 1 rupee 50 paisa per unit. Units produced 4000 and units sold 3600 at the rate of 50 rupees each. So you are required to prepare cost sheet in pro forma, in proper form. So for that preparation of cost sheet, I have already prepared this sheet, pro forma. So what we are going to do first, just observe the problem, you can note down later. Once if you understand this problem, The other problems you can catch it quickly. Now here first thing is that what do we want? Direct material, direct wages, that will take. If we add it, you will be getting prime cost. We will go for first prime cost. Now here direct wages, direct material means raw material. So I will take it here, raw material consumed. Raw material consumed is here 80,000. And also direct wages, are here 48,000. So this you got. If we add it, you will be getting prime cost. Okay. So we will add per unit. I will tell you later. First let us work out normal problem. So this is 1,28,000. So 1,28,000 is what? Prime cost. To the prime cost, what we are going to add now? Machine hours worked and machine hour rate, both are given. So it means you will be getting factory overheads. Factory overheads are here 8,000 into 4. 8,000 at the rate 4 rupees. 32,000 you are going to get. So this is factory overheads. If we add factory overheads, what do we get? Here works cost, right? So we are going to get works cost 1,60,000. So this is works cost or factory cost also you can say. Works cost, you got it. To that what we have to add? Factory overhead, office overheads. Office overheads, what they are saying here? Office overheads, 10% of work cost. 10% of this will be the office overheads. So now add office overheads. %10 of 1,60,000. In brackets I am saying because 10% of works cost they said. So 10% of this means 16,000. 16,000. So you will get, once if you add office overheads, you will be getting cost of production. So this if you add it 1,76,000. So this is cost of production. Cost of production you got. Now here you see closing stock also, we have closing stock. They did not say anything, but there is a closing stock. How? Units sold is 3,600. Total units are 4,000. Out of that sold is 3,600. It means 400 is unsold. 400 is here unsold. 400 unsold, we have to take it as a closing stock minus closing stock. 400 at the rate, what means whatever this per unit cost of production you are going to get, with that we have to calculate it. To know that, first of all let us calculate per unit. So far whatever we have done. How do we calculate per unit? Means total units are here 4,000 units. All items divided by 4,000. You will be getting per unit because total production is here 4,000 units. Production is 4,000 units. It means per unit if you want to get 8,000 divided by 4,000. In the same way 48,000 divided by 4,000, like this we need to calculate. So let us do it fast. 80,000 divided by 4,000 is 20, and 48,000 divided by 4,000 is 12. So if you add, we will be getting 32. So even if you want to do 1,28,000 divided by 4,000 also, you will be getting 32 only. And this one 32,000 divided by 4000, 8. So if you add, we will get 40, and 16,000 divided by 4,000. This is 4. It means if you add it, you will be getting 44. So closing stock 400, you know that 400 at the rate of 44. Always remember, closing stock at this level, whatever may be per unit, that you are going to consider, that you are going to calculate for the closing stock. 400 into 44. 400 into 44 comes to 17,600. 17,600. So anyway, this also 17,600 divided by 4,000 will be getting 4.4. So this, if we add it, you will be getting 600, 3, 1,93,000. Sorry, closing stock we have to deduct it, no? So we will deduct closing stock 1,76,000 minus 17,600. It is 1,58,400. So what do you call minus closing stock? Means this is cost of production of goods sold. Cost of production of goods sold. And also there is selling expenses, right? So selling expenses are here. 3,600 sold at the rate of how much? 50 rupees each. Okay. So minus selling expense, sorry, selling expenses. Selling expenses are 3,600 sold at the rate of 1 rupee 50 paisa. So selling overheads are 1 rupee 50 paisa per unit, selling expenses. Sold is 3,600. So if we calculate it, 3,600 into 1 rupee 50 paisa, you will get 5,400. So this selling expenses always you will add, only closing stock itself only will deduct it. So if we add, you will get 800, sorry, 1,63,800. Okay. So this 5,600 means this is at the rate of 1 rupee 50 paisa. It's already given. 3,600 selling expenses at the rate of 1 rupee 50 paisa. So 1 rupee 50 paisa we have written. Now next what? Selling expenses are over. After adding selling expenses, whatever we got, that we call it as a cost of sales. So this is cost of sales. And also there is sales. Sales, they sold 3,600 goods. Okay, 3,600 they sold, means see the sales. 3,600 they sold at the rate of 50 rupees each. 3,600 into 50. You will get 1,80,000. Sales is this much. Now what is the profit? Profit is here. You are going to write 1,80,000 minus 1,63,800. So this is 16,200. 16,200. If you want to take it as a this one 45, you will get 1,63,000 per unit, 1,63,800 divided by 4000, you will be getting 40 point, so this is already 44, 40.4 means this is 40 minus, no, so this is 40 plus 1, so you will be getting 1,63, 40.95. 40.95 you are going to get, and this one profit is here 16,200 divided by 4,000 units. So this is 4.50, 4.05, and 1,80,000 divided by 4,000 comes to 45. If you add it also, approximately you will be getting 45 only. That's all. This is the problem. Let me explain you clearly once again. It's feeling good. So if you see this, first of all, problem what is given according to this pro forma, we have to prepare it. First thing is the direct material and direct wages. Direct material, direct wages are here. So if you add it, you got the prime cost. And along with that, you can work out per unit also. How do you get per unit? See that how many units are there. If it is given, then only you are going to get per unit. Otherwise, no. Sometimes in the problem, units are not given. Then ignore this column. Here 4,000 units are given. So every item you are just dividing with 4,000, you will be getting per unit. Okay. So prime cost you got. Factory overheads also given. Factory overheads 8,000 at the rate of 4 rupees per hour. 8,000 hours per hour, 4,000. 4. It means it is a factory expenses, machine hour. 32,000 you got it. So if you add factory overheads, you got works cost. To the works cost, we have to add office overheads. They did not give the direct amount of office overheads. They said 10% of works cost is the office overheads. 10% of this means 10% of 1,60,000 is 16,000. If we add, you got cost of production. Cost of production you got. And closing stock is there. It's not mentioned, they did not say anything, but they said the total is this much. They sold 3,600. It means 400 is unsold. It is hidden in the problem. Whenever closing stock is there, after getting the cost of production, you have to deduct it. Closing stock 400 at the rate of this one, at the rate of 44. Okay. So this you have deducted. After deducting, you got cost of production of goods sold, and to that we have to add the selling expense. Everything we are adding, just closing stock we have deducted. Now here selling expenses, if you add, you are getting selling expense also they mentioned very clearly. 3,600 sold at the rate of selling expenses 1 rupee 50 paisa. So calculated, you got 5,400. So if we add selling expenses, you got cost of sales. Cost of sales, once if you get it, see that what are the sales. How do you got the sales? 3,600 sold at the rate of 50 means these are the sales. Sales you got it. Once if you get the sales, sales minus cost of goods is the profit. The difference between these two is the profit. Simple, that's all. This is the cost sheet. If you understand this problem, take out your textbook and try some illustration problems or textbook backside problems so that you get a command. Okay. And in the coming class also, I'll take different problems so that you'll find different formats, different ways how to prepare the cost sheet. So stay connected. There are many subjects already prepared. Check out the playlist or description box and use it. Do recommend this channel to someone who is struggling to learn the subject. They can understand easily. So you'll be helping them. So stay connected, practice well and have a bright future. Good luck.